And we are live. Hello, everyone. Welcome to, a new episode of Blockchain Talks. In today's episode, I will be talking about currently deleting a few lines here, sorry. Currently the most controversial update about Bitcoin Core that has taken place. However, before I begin, let's do a little market analysis. Am I good? Yeah, I'm good here. So, sorry, it has been a while taking on a vacation. Um, Before I begin, perhaps it is important to notice the following 2 weeks, no new episodes of Blockchain Talks or Crypto Bull will be announced. Reason thereof, I'm on a honeymoon with my very recent wife. So, that being said, let's begin with the episode. So you guys can see I'm on TradingView here, playing a little bit, zooming in, zooming out, trying to get the rates correctly. There we go. We're going to do a small analysis on the current state of the market before I bite in on the Bitcoin Core update and what it exactly is about and why it is so controversial. Naturally, there is also a little surplus announcement, some news that reached my ears today that I want to tell you guys all about. So, without further ado, let us begin. As you guys can see, this is trend of the last 3 months, so September, October, November. As you can see, this little crash right here is what occurred due to FTX. Before that, we were relatively stable. There were a few highs, some volatility, and then FTX happened, the crash, bankruptcy, and bang, we are at a lower trading level. However, as I mentioned a few times in my private Telegram group, as well as on social media, I expect some sideways movement as soon as the thing runs its course. And that is exactly what I said last week, I believe, and which is occurring right now. If you start zooming out, you can clearly see this is the crash, and we are indeed at a lower level whereby around 17k is our new resistance level, but we are quite stable. We are trading sideways. Are some volumes occurring? Naturally, but volatility is a little bit gone. Markets are relatively stable. It might be the case that a bottom might have been in. However, do not take this as financial advice. I might be wrong. Reason thereof, I didn't really look all too deep into the current market situation. I know everything underneath 20k or even 18 or 19k is a steal for accumulating Bitcoin. The only thing that you need to know right now is market is trading sideways, which you can see here. And well, there isn't much volatility going on, especially when compared to previous episodes. See, it's relatively stable. It's on the Ollie. It becomes much more interesting. Go like this. Start zooming out, and you see some volatility, but we are relatively stable. On that account, not much is happening in the market. There is naturally the entire fallout of FTX, which I have been dedicated 2 episodes already in the past weeks. On that, I will say it's no use already beating a dead horse. There are people who want to follow up on as to what occurred and what the courts will say and prosecutions, yada 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 yada. But I'm a healthy man, and I say get over it, move on. Naturally, it's a shame for the people who have lost during that crash, who have lost their funds, or whose funds are locked up in Alameda, in FTX, etc., etc. But that's one of the things. One of the basics in crypto is do not keep your coins on an exchange, not your keys, not your coins. It has been repeated to death. Also, one of the things I'm frequently saying in my free Telegram channel and in my courses, that is cold wallet self-custody. That's really the basis of all things. And, well, the last couple of weeks or even month, I might say, has shown just that, how important fundamentals are. Speaking of fundamentals, let's head on over towards the main meat. A little article from the Cryptonomist: controversy over release of new version of Bitcoin Core software. So, for starters, Bitcoin Core is the core wallet. Well, it explains it right here. Let's just read it on, shall we? Before I start ranting on and on and on and possibly make mistakes. So, Bitcoin Core is a software with which Bitcoin nodes can be managed. It's not the only one, but it is by far the most widely used, as it is reportedly installed on 40,729 of the 15,295 public nodes currently surveyed. New version 24.0 is expected to release soon, but there is controversy about it. Small update: this Bitcoin Core software update has been launched already. Version 22.0 is currently available. Next one is already the release candidate state, so be released very soon. Here we go. There will be some important new features in the new version, such as how nodes download blocks when they synchronize with the network. However, the controversy concerns the introduction of an additional option that will allow users to apply full replace by fee logic. Now, little word of information here on the side note. What is a replace by fee logic or function? Well, you see, if you send out a transaction, if you're going to do a payment, naturally there is a transaction fee attached to said transaction. That transaction, miners can pick it up, get paid to process your transaction, and save it on the blockchain. Very easily said. However, what is this replace by fee logic? Well, it implies that if your fee is too low, that it might not be immediately picked up and that you have a longer waiting period. So, in previous core updates, they implemented a replace by fee logic, which means you can make a double transaction with same amount of money to the same sender with the same bitcoins. However, you can recall the first transaction and resend it with a much higher transaction fee. That means in the mempool, which is nothing more than a pool where all transactions are awaiting to be picked up, that there are two transactions with the same addresses being stuck, I'm going to say. One of them has a higher transaction fee. The one that is picked up will naturally be the one that is verified, and then comes the entire fundamental of Bitcoin security. The one with the lesser fee will just be abandoned or remain stuck for eternity, never to be picked up ever. That's the replace by fee logic. Now, what is a full replace by fee logic? Well, with the replace by fee logic, you still rely on nodes verifying transactions and saving them. And as explained here, till now, Bitcoin Core nodes apply the first seen rule, meaning conflicting transactions were simply not accepted into the mempool. In this new version, users will be able to choose to have their nodes accept and forward any conflicting transactions if they include a higher fee than the other transactions they conflict with. That's what replace by fee is. And it's even being mentioned here. Replace by fee allows users to replace an unconfirmed transaction with an alternative transaction with a higher fee until it is placed in a block, as I explained. GEM, however, works only with zero confirmation transactions, implying that the nodes didn't pick up the transaction itself and that there are zero confirmations about. That's the important distinguishing aspect here between a full replace by fee and a replace by fee. Currently, we're talking about replace by fee. These transactions that can be accepted even before a miner confirms them by placing them in a block. Problem is that in a new version of Bitcoin Core, full RBF logic will be built in that allows for the replacement of transactions that have not yet been confirmed. According to some, this will harm the network and even facilitate double spending attacks. Indeed, the Bitcoin blockchain has been built in such a way to prevent double spending attacks. Now, when replaced by fee was introduced, quite a lot of controversy was already present. And they were afraid of the day that a full replaced by fee would come about. And this is exactly what happened with the Bitcoin Core update, which was very recently launched. Problem is that in a new version of Bitcoin Core, full RBF logic will be built in that allows for the replacement of transactions that have not yet been confirmed. According to some, this will harm the network, so that I read. Sorry, guys. It should be mentioned that such arguments have there been since version 12, but have intensified recently due to the expansion of Lightning Network. Most capital is the founder Ellen Moon, Dario Snydermanis. So basically, what is this all about? It is all about security of the Bitcoin network. That by implementing the full replaced by fee, you are opening up the network towards lost my words there. Sorry, guys. That you're opening it up to a double spend attack. And here we have someone actually pinning it down quite nicely. I have it here. On what exactly the troubles are. It's from Thomas Farah, just released, new feature affecting big industry players, the network scalability and security. I'm talking about a mempool full return by fee configuration option. Let us break it down. Mempool full RBF remains too. So Bitcoin memory pool, which is the waiting room for all unconfirmed transactions on the Bitcoin network. So that we know, but I'm going to let you guys read anyway. Prior to return by fee, the memory pool or mempool accepted whichever transaction it saw first. This in order to avoid double spending. 2016, with the introduction of BP, Bitcoin Improvement Protocol, on 25, Bitcoin Core has used what's referred to opt-in RBF or recall by fee. Transactions in the memory pool can be replaced if they signaled they were replaceable as they were opted in for. The release introduces this release, so we're talking about Bitcoin Core 2.4.0, introduces full RBF, which allows full replacement of any transaction as distinct from only replacing transactions that opt into it. It's controversial. There are industry players using zero confirmation transactions in their applications, meaning they are letting transactions go through and be saved without confirmations. But in another way, they are accepting payments which are sitting in the mempool, which implies as long as a transaction is in the mempool, there are no confirmations and the transactions didn't pass through. That implies the payment never took place. However, a few industry players have pushed for a full RBF. And, well, basically, like he said, they're accepting payments which are sitting in the mempool, so which are without confirmation. This is something which everyone knows is theoretically dangerous, but hasn't been an issue, meaning what is in the mempool can always be picked up later on by either the goodwill of the miners or after a long while if the miners really want to clean out the mempool as good as they want to. That's some fundamentals on the side, not going to delve all too deep into it. Because once the Bitcoin network has fully propagated a non-replaced by fee transaction, you needed the collaboration of a miner to replace it, which isn't easy to get today. When too many of the biggest miners offer off-brand transaction broadcasting services that currently won't process conflicting transactions or double spends, which can occur with full RBF. With the introduction of full RBF, these zero confirmation transactions are simply too risky. Chances of facing a double spend have gone up significantly if you're someone who's accepting zero confirmation transactions. So one of the fundamentals is if you want your Bitcoin to pass through or want to be paid, please make use of the network whereby confirmations are being used and not zero confirmation transactions. So why did protocol developers just push forward this change? The point of Bitcoin blocks and proof of work is to solve double spending. As I've mentioned before, Bitcoin has been developed in order to be censorship proof and to avoid manipulation of transactions and or data, which also is the double spending problem, which can occur with classic digital ledgers. That's why there's encryption going on. That's why there's the entire proof of work going on, etc. By implementing this return by fee or recall by fee and going full on with it and accepting zero confirmation transactions, you are, well, negating everything what Bitcoin tried to solve. You are heading back towards a TradFi digital ledger. By reason, well, the double spending problem is being reintroduced. When a miner receives two conflicting transactions, the high security policy is to have them take the higher fee. That's how it works. An assumption that miners are rational is better than assuming miners are nice. That's basic coding, that's basic programming. The higher your fee, the more likely and the more faster it will be picked up. It's not that miners will know who you are. They are just interested in getting the highest transaction fee and getting paid for their work. That's basically it. Unfortunately, while scaling Bitcoin through zero confirmation transactions looks tempting, the other reality is it's not possible to do so without damaging security, and that's why we have the Lightning Network. So actually, this recall or return by fee is nothing more to scale up the network, to process transactions faster. Now, in my opinion, I kind of understand where people are at with this update. However, it poses an immediate security risk, just as Thomas Farrer mentioned. Bitcoin has been developed, its blockchain and its entire raison d'etre, well, has been made to avoid double spending. This core update, well, reintroduces it and is actually negating a big part of its security. Even opens it up for leverage. Just imagine a big player accepting zero confirmation transactions en masse for big numbers, for literal billions of dollars. You are going to leverage the network with that. You are going to give it a much bigger market cap than it truly has. And I do not need to tell you guys how bad that can be, especially if companies go down. Just look at, well, this year with 3 Arrows Capital, Celsius Network, and FTX, what leverage can do. I'm much more of a fan of the Lightning Network, which makes, use of another methodology in order to speed up transactions. It has to do with choosing participating quick nodes to get faster amount of confirmations and more likely to be picked up by miners. This, on the other hand, well, that's just basically reintroducing TradFi. So with that, that's the controversial Bitcoin Core wallet update. I did send on my Twitter, I believe it's still open. Hold on a second. I did post about it on November 4th, I assume, with a link. Here it is. News Bitcoin launched 4th of November. So in a nutshell, that's what I was talking about. You can pull up transaction, you can confirmation and change. So we have had this entirely, and the news article being mentioned here, I believe, did or could redirect you towards a voting mechanism to stand against the proposal. Sadly enough, it passed through. But as you guys can see, be sharing it. I did make mention of it, and people really need to start watching out. I do apologize for sometimes coming across a little bit confusing. It's been a few hectic days, and I've got to admit I'm having a little trouble keeping a decent focus on things. Perhaps I need to do slightly calmer here. So yeah, that's where it concerns the Bitcoin Core update. These are the articles. You can look them up for yourself. This is Tom. Other announcement concerning Terra Luna and Lunk. Terra Luna Classic price prediction as Merge Protocol tries to bring Luna and Lunk ecosystems together. Lunk to $2 by 2023. Now, as you guys know, Terra Luna crashed the markets heavily earlier this year. I believe it was May or June. I believe it was May. Yeah, it was in May of this year. Crashed down the markets, became insolvent, dumped for, well, literal tens of thousands of Bitcoins onto the market. Supply went up, price went down, etc., etc. And Do Kwon, or Stable Kwon, as known on Twitter, well, he bailed out. There's, well, he's still being searched, if I'm not mistaken. And, well, in order to appease the community, started an offshoot, a fork of what is now dubbed Luna Classic, which was called Luna 2.0, but didn't really have the success as it had. However, many people remained in Luna Classic. Some due to having opted in during the crash, thinking, oh yeah, this is opportunity, but failed to realize things went to zero and it crashed and burned. However, despite me having made negative remarks about Terra Luna and even Luna Classic itself, I do still wish the best towards Luna Classic by reason that it is now, well, mostly community driven. They have made good attempts in order to correct the mistakes from the past and make it once again a viable project. They implemented burning mechanisms, they started adjusting code, etc., etc. And, well, I was kind of a bit surprised to read this, that the fork of Luna, which was a clear statement by Stablecoin or Do Kwon, by saying, look, Luna Classic is dead, we fork, we go our own way, and we let the others die as well. There's some airdrop for a few addresses, etc., etc. However, I'm kind of surprised that they now want to merge both once again. Let's read the article. Terra Luna Classic price has crept up by 1% in the past 24 hours following the emergence of a proposal to merge its ecosystem with that of the newer Terra 2.0 platform. Let me be fair, not a fan of it. Lunk is also down slightly by 0.2% in the past week and by 35% in the past month, with its ongoing token bursts doing little to counteract the downward pressures exerted on the wider market by FTX's collapse, which is natural. Pushed forward by developers in the past couple of days, the outlined merge would enable holders to use their inter-blockchain communication to send their Lunk to Terra 2.0 and receive the newer Luna in return, as well as decentralized exchange rewards. But with Lunk enjoying a bigger market cap than its younger counterpart, it's not a given that holders will take the opportunity to swap it for something less valuable. Terra Luna Classic price prediction as much protocols. So, sorry, that's the title again. According to Lunk's chart and indicators, the altcoin is enjoying some degree of momentum. An obvious rally being in the work, its relative strength index, purple, is hovering around 55 at the morning, meaning the direction is leaning more towards buying than selling, so people are buying in. It also seems that Lunk's 30-day moving average, red, is on the brink of rising above its 200-day average, blue, move that could signal an incoming rally. You might notice this is going to be familiar with the rest of the market. So what I'm reading here can be applied to the greater market. Whilst with the wider market remaining unstable, there's no guarantee to crossover would last for long, as can be seen by previous instances this year. Aside from FTX collapse and resulting fallout, the most pertinent thing happening in relation to Lung right now is the aforementioned merge. DAO merge protocol developments say this is set to be released shortly after IBC opens, provisionally in December, so within one of the next couple of weeks. Protocol will reward users for swapping their Lung directly into Luna by paying them extra decentralized exchange incentives for the provision of long-term liquidity. Latest news on this proposal is that it will happen at some point next month, so this month, although this remains provisional given that it's dependent on the reopening of the IBC bridge, which will connect the Terra Classic and Terra 2.0 networks. That probably will come true, however. Aside from being able to swap Link for Luna, the only other details available are those that who do make the swap will also be provided with DEX-related incentives as a reward for providing liquidity. What are those rewards? No idea. And as said, given the lack of detail and also given the fact that the proposal seems aimed partly at shrinking, if not ending, the Terra Classic ecosystem, community members have been less than enthusiastic. Indeed, some have suggested that if the idea of swapping Lunk for Luna proves successful, it would effectively kill Lunk. I understand that sentiment, and I would hate to see Lunk go. Yes, you've heard that very right, dear viewers. By reason, right now, after the Terra Luna collapse and Lunk was incepted and community got involved, Lunk, in my opinion, has achieved more trust. Community was finally working together in a more decentralized and distributed way than it was before. The merge would once again reattach their market cap, would once again reattach Luna Classic towards the very same perpetrators who crushed the entire market. I mean, that's like being abused, running away, but still returning back towards your abuser because he has a big mansion or whatever. It's just plain stupidity. Despite such warnings, proposal of Lunk to Luna swaps has done little to impact the price of either Lunk or Luna. Both are up by anything between 1 to 2% in the past 24 hours. Yet it's worth noting that many other major coins have outperformed such percentages with the same time frame. So marginal. Looking at Lunk more generally, it continues to witness token burns. Around 28.8 billion Lunk has been burned to date, which is very good, out of a total circulation of 6.88 trillion. If you express that in numbers, it's, well, peanuts, but hey, considering the time scale, they will get there eventually. As such, there's still a long way to go before its on-chain tax burn and various exchange burns makes a real dent in its supply. With this in mind, it's unlikely that the market will witness any big Lunk price rise in the near future. Best scenario would see it return to these levels as it saw in September. So yeah, this is actually the big news for Terra Luna Classic and the potential merge with its fork Terra Luna 2.0. My word of advice to the community is to not swap them. Terra Luna Classic stuck around thanks to community effort. It stuck around and is improving itself thanks to community effort, which is all what cryptocurrency and blockchain is about. To be as distributed and as decentralized as possible. The merge would theoretically and practically negate all that has been built by the Lunk community. So on that account, I will say this to the Lunk community: keep your head strong, do not swap for Luna. By reason, what will happen with Luna 2.0 will happen with what occurred with Luna Classic before the fork. They will crash and burn by reason they are still centralized. With that, I'm going to end this episode. I thank you all for watching. I hope to see you, well, in a couple of weeks when I'm redoing this episode. Thank you all for watching, and up until next time. Bye.